It's Friday, February 24th, 2023. Key Fed inflation measure rose 0.6% in January, more than expected. This on CNBC this morning. I'm sure most of you have seen this. The Dow Jones earlier this morning was down 500 points. Closed today down 336 points. NASDAQ closed down 195 points. It was also down much more, down over 250, over 260, I think, at one point. So these markets did come back a bit. It almost seemed like watching the Dow with about 10 or 15 minutes left, they got it into the 200s. And then it just sold off in the last 10 minutes. It was down over 400. But they did bring it back. It was down only 336 at the close. The core personal consumption expenditure price index, as I said, increased 0.6% for the month and was up 4.7% from a year ago. The Fed has got a problem here, ladies and gentlemen. The Fed has got a situation. They are going to have to get aggressive. They're going to, look, there were people that told us over a year ago that they would never raise rates. Then the Fed did. Then they said then these same people said they'll never do it again. Then the Fed did it again. Then they said they will never go, 75 basis points. Then the Fed did 75 basis points 4 times. And people are still saying that, the Fed's gonna pivot, the Fed's gonna reverse course, they're gonna have to cut rates. It's not gonna happen. The Fed is gonna continue to raise rates. Unfortunately, the government is not going to stop spending. It says right here on CNBC, Fed cannot tame inflation without significantly more hikes that will cause a recession, paper says. Now, this paper, one of the authors of this paper was former Fed Governor Frederick Mishkin. They're warning you, ladies and gentlemen, that we're heading into what they call a recession. By the time they admit that we're in a recession, we will be in a full-blown depression. And here's another reason why we will be in a depression, why inflation isn't going away. U.S. unveils $2 billion in aid for Ukraine, sanctions and tariff hikes on Russia a year after invasion. Now, let me ask you a question. What does this mean for inflation when we've already spent over $100 billion over there? Now, they're unveiling another $2 billion. It's a blank check. How in the world, as the Fed is raising interest rates, yet we are spending billions like it's nothing, and people think that inflation is going to decrease? Anybody believing we're going back to 2%, you need psychiatric help. Now, watching some of these shows today, they're talking, well, maybe if we go to 4 or 5%, that's the new normal, from 2%. Inflation to 4 to 5%, and we're just going to have to accept it. And that's probably what's going to happen, but it could go much higher than 4 or 5%. I think that right now, the Fed would have a very difficult time getting real inflation down to 4 to 5%. I really do. The economiccollapse.com, the economy is crashing even faster than a lot of experts had anticipated. We look at the housing market. It is beginning to crack. It is under pressure. It's amazing. When I talk to these real estate agents, maybe I've talked to some lenders, they really believe that this summer, everything's going to be back to normal. Everything's going to be okay. Mortgage rates will, they'll be 4 or 5%. Home prices will begin to go back up. Everything's going to be fine. I understand that they have to fool themselves and they have to fool their clientele into believing this, but wow, these people are drinking the Kool-Aid. Anybody believing that the housing market is going to improve by this summer, good luck with that. But I don't even know how the housing market is even standing up right now, because to me it looks like a house of cards built on quicksand. When you look at the economy, you look at the condition of the consumer, you look at the condition of retailers, you look at debt. Just according, just reading this article, the economy is crashing even faster than a lot of experts anticipated. And you look at housing and you see home sales across the country just plunging, and prices are going to follow. Bankrate.com today, the average 30-year rate mortgage, 6.96%. 6.96%. We look at this economy, look at the debt, 31.5 trillion. We are heading right to $32 trillion. Over 800 retailers will close this year. Look at the hundreds of thousands of small businesses over the last 3 years we've lost. How many of the large retailers have closed shop? We are on the cusp of a third world war, and if we do not let cooler heads prevail here, we're gonna have another big problem here, and that's a world war. And let me tell you, America is not prepared for world war. We have to import so much into this country. Economically, we will be destroyed before we go to war with anybody. That's for sure. There's no way we could survive a world war. No way. We don't manufacture here. We don't have the mental mindset. We have too much debt. There's just no way we would survive it. Inflation is going to be relentless this year, in my humble opinion. More signs of this economy crashing right before your very eyes. Household debt at all-time highs. You look at the homeless crisis. I've never seen so many homeless people in my life. Growing up in Chicago as a kid, I can't even remember ever seeing a homeless person. Not saying they didn't exist, but anywhere you go in the state of California, you're going to see homeless people. You're going to see tents. You're going to see cardboard boxes. You're going to see people living in their cars. And reading the comments, California is now in many other states as far as the homeless crisis is taking place. Credit card debt, all-time high. We have a $1.4 trillion deficit in this country. We have a savings rate. And here's another big problem, ladies and gentlemen. We have a savings rate of 2.4%. Think about that. After you pay your taxes, pay all your bills, you take $100, for example. Out of that $100, you have $2.40 left. That's it. How are people going to save up for an emergency? How do people save up for retirement? How are people going to save up to ever buy a home? I mean, these are just things that are happening right before our very eyes. And you could probably list another 100 things. I'm just thinking this off the top of my head today. The condition of this economy is the worst I've ever seen in my lifetime. And I think right now you could compare it to the Great Depression. Look, 42 plus million people on food stamps, food lines across the country. Our infrastructure just absolutely crumbling. Just what we've seen at our airports. We can't get planes to take off. We can't keep trains on tracks. The attacks on our grid that we've seen last year, and we're going to see more of that. It is unbelievable what is taking place. Here's another one from Fox Business. Credit card debt higher than savings for record percentage of Americans. Talked about this yesterday. 36% of Americans have more credit card debt than they do in savings. Get this, a survey done by Bankrate reported that 49% of the respondents said they have less money in emergency savings or none at all compared to a year ago. How many people have absolutely no money? Nothing. They are paycheck to paycheck and one emergency away from their life changing. And we've gone out and we've shot a lot of video with homeless people, and there's always that small group of people that love to judge and criticize and just tell you how bad homeless people are. But what these people don't know is there's a lot of people. We have, I think, 364,000 vets living on the streets of America. We got good people living on the streets of America. Yes, some people made some bad choices, but many just could not withstand the hospital debt, the medical bills. Some people lost jobs. Some people just had serious depression and just couldn't cope. And before you know it, they don't have a family. They don't have friends. They're on the streets. So I don't judge anybody for living on the streets. There's a lot of people that come from abuse. and really didn't have too much opportunity in life. So my heart goes out to that. So I don't judge people like that. I'd rather help people like that and pray for people like that. But we're going to see more of that, and it's going to happen to people who, you know, were driving the BMW or the Lexus, or the people that were living in a nice condo or a nice house, people who had a nice job. And when they get behind or they have an emergency or they lose a job, which is an emergency, and then they have some bad luck, maybe a medical bill, all of a sudden, you know, they're 90 days late on rent. The repo man just took their car, and guess what? They're looking at living in a tent. They're looking at being on the street. And I know that scares people. And a lot of people will say that's really negative. And, you know, somebody commented, I believe it was today, that I'm looking forward to a Mad Max scenario. And that's the farthest thing from the truth. I'm preparing for a Mad Max scenario. Don't get me wrong. But to this individual to say something like that, you know, living in California for most of my life, watching the state completely decimated and destroyed, homeless encampments everywhere, crime everywhere, taxation, just everything that you could do to hurt a state has been done right here in the state of California, and it's going to turn it into a Mad Max scenario. And I really wish that could have been avoided. And it's really painful to live somewhere that's so beautiful and to watch the demise of such a beautiful state. And so many beautiful people, good people, hardworking people, to watch them just leave, get out of here. People who are just not happy now with what's happening in their state, and just the whole mindset now of what's happening in California. It's sad. It really, truly is sad. So to say that I'm looking forward to a Mad Max scenario, no. The Mad Max scenario has already begun. Look at the crime, horrific. You look at the theft and the violence that is taking place right now. Anybody in the right mind does not look forward to anything like that whatsoever. I've done everything I could to get people to prepare for it, try to avoid it. That's why I'm leaving, so I don't have to be in a Mad Max situation. That's why I'll be living in the rural South on 30 acres, so I can avoid it. That's how much I look forward to it. I have to leave my state. I have to leave my friends. I have to leave my life behind to get out of here to avoid a Mad Max situation, while somebody writes to me and says, I'm looking forward to it. You're an ignorant human being. I will tell you that. And I hope that you get counseling. I hope that you get help. And I'm praying for you. I really am. Anyone that thinks that I'm looking forward to a Mad Max situation, you're completely misunderstanding me. So I want to be very, very clear about that. And to that individual, I don't want to come across as angry or spiteful or irritated towards you, but I think that you have to be really a bit ignorant to think that I would hope for a Mad Max situation. It's the last thing I would ever hope for. I don't want to see a collapse. I don't want to see a social breakdown. I don't want to see a Mad Max situation. I don't want to see anybody get hurt. I'm completely against violence. I'm against war, all of that. But I'm also a realist, unlike you, who probably is completely unprepared and naive to what's happening and has absolutely no preparation. I'm prepared for reality. I'm prepared for the real world. Do I hope it happens? Absolutely not. Do I think it's going to happen? Absolutely. And that's why I have to take myself, my family, and we have to get out of here, because I don't want to be here. I don't want to be around it, because I know how bad it's going to get. So I want to clarify that. Big city restaurants and bars are missing office workers spending on Mondays and Fridays. This is costing cities billions of dollars across the country. You know, think about all those vacant office buildings in all of your major metropolitan areas. What do they all have around them? They have the coffee houses, they have the restaurants. Well, how do those coffee houses, those bars, those restaurants survive now when people aren't coming into the office and working? Those buildings are vacant, ladies and gentlemen. We're going to see more restaurants closing, and many of them are cutting hours right now just to buy time. That's all they're going to do. They're laying off, they're cutting hours, but eventually those surviving remaining restaurants A majority of them are going to close also. It's very, very sad. Very sad. The hedge today, what's behind the never-ending freight brokerage layoffs? In a time of record low unemployment, a crucial segment of the supply chain has been massive job cuts. The freight brokerage industry. The broker is the intermediary between the carrier and the shipper, such as the retailer. Freight volumes are much lower than they were a year, 2, 3 years ago. And many brokers are going to get laid off because there's too many brokers to begin with. We added so many brokers over the last couple of years, and now that these freight volumes are decreasing, less brokers, and eventually that means less truckers, right? So what was it, a couple of years ago, a year ago, when every day on TV, we need more truck drivers, we need more truck drivers, please, please, please. Now you're going to see truck drivers laid off, and we're going to see layoffs now hitting these blue collar jobs. Many of the layoffs that are reported are in the tech sector, these white collar, higher paying jobs. We're going to start seeing more and more layoffs, blue collar jobs like trucking, and we're going to start seeing more in the service sector area too, which are a lot of people working part-time, a lot of retirees. Think about these people who are 75 years old, forced to work, and they get laid off, and they need that income to survive. They're in survival mode. Ford suspends electric F-150 Lightning production for another week following battery fire. Let me ask you this. Is the EV industry going to survive? I think it is not. I think we're making a huge gamble here, and I think that we're going to lose. I don't think it's going to be accepted like they're hoping. I don't think people are buying into it like they're hoping. And again, I think that these industries are taking a huge gamble. These vehicles, I just don't think that the average consumer, first off, they're so expensive. You look at the muscle car crowd, like the Dodge Chargers, the Dodge Challengers, Mustangs, Vets, all that. We're producing some really ridiculous fast cars that sound great, have great performance, and now heading into EV. I just don't think that a majority of people are going to accept this. I'm not saying that there's not a place for it. I just think that you have to let the free market dictate what people want to drive. That's how I see it. And another question is to all of you, please comment down below, is where's all the lithium going to come from to make these batteries? And how dirty is mining lithium? And what happens to these batteries when they're no longer usable? How do we, how do we get rid of these batteries? What type of waste management do they use to get rid of all these types of batteries, lithium? So I don't know. I just don't think I don't think it's getting the acceptance that they thought. But again, where the lithium's coming from, and then how do you dispose of these lithium batteries when the lifespan of this car is done? And how dirty is that going to be? So something to think about. Luxury EV maker Lucid appears to have a demand problem. They had 28,000 reservations for its Air sedan as of February. In November, they had 34,000. So that's a decrease of 6,000 cars. Another question I have is when some of these companies go under, which they're going to do, and say that this car company Lucid goes under, and you bought a Lucid last year, and they go under next year or 2 years from now. Who repairs it? Where do you get the parts? What happens after you spent $100,000 on a car or whatever these things are going for? So I'm going to wrap this video up, but a few things that I want to close with. A few notes that I made yesterday, and I just want to make note of this. We saw $2.3 trillion in equity vaporized year over year in the housing market. I want to clarify that before I leave today, because this is just reinforcing what you see happening, what I see happening. $2.3 trillion in equity has been lost in homes year over year. This is the largest June to December drop since the 2008 crash. It's been 15 years since we had a housing crash, ladies and gentlemen. We are way overdue. And this is going to be one to remember because it was built on fake equity, fake success, and fake millionaires. And we're going to see a lot of fake millionaires, you know, like the ones you see on social media. Maybe you know some of these people personally. We're going to watch a lot of these people fall. We had more fake money pumped into the system than any time in history. Remember, $7 trillion in 2 years pumped into the system. So as I leave you today, people with cash, people with assets right now, people with very little debt or no debt at all, they are going to thrive. They are going to do so incredibly well during this next downturn. It's going to be a once in a lifetime opportunity. And this is why I've been telling you for years to keep your powder dry, stack as much cash, as much gold and silver as you can. Make sure you have a skill set. Make sure you're exercising caution and patience. People with fake success, and we've seen a lot of fake success over the past couple years. These people, I think a lot of these people, we could say, made a lot of money in crypto. These markets were all pumped up. We had, again, all this fake money injected into the system. People were drunk on the euphoria. And these people continued to go out and spend buying the watches, the cars, the real estate in these overvalued markets. Buy. And now everything has changed. We look at how many of the crypto companies now, I think 94% of all the crypto companies have been buried and very few are surviving right now and they're on life support. But these people, the fake money, the easy money, they're all going to be exposed. The real money is now going to come into the picture. And the real money is going to be the big winners here because everything's going on sale. The watches, the cars, the RVs, the boats, land, etc. It's all going to be going on sale. Doesn't mean that it's going to be next week or next month, but I think this year we're going to begin to see all of it take place. And I think in the next 12 to 24 months, it's going to be absolutely incredible, historic with what we're going to see take place in this economy. And the people who have cash, the people who have very little debt or no debt at all are going to capitalize on this. Another thing, the Fed is going to raise possibly 50 basis points in March, could be 25, then maybe they'll go 50, but I think we have a 50 in there at some point. But I think it's very possible we see 50 in March. But we know we have 3 rate hikes coming. That's going to put it, if we go 50, 25, and 25, that's going to put us at 5.75. Remember, everybody said that there would be no rate hikes. Then when they figured out that there were going to be rate hikes, well, then they said, well, all right, they'll go 5.25. That's the highest the Fed will go. Well, now it's looking like right now the minimum is going to be 5.75. That's going to put a 30-year mortgage over 8%. Asset prices have been completely overinflated. The air is now coming out of the bubbles. We're getting ready to watch these bubbles burst, ladies and gentlemen. And when they do, prices of literally everything is coming down. Now, I do think that we're going to see some prices of things going up. Energy, food, things like that probably will continue to go up. Wow, we're going to see a huge deflationary period in housing, cars, RVs, boats, luxury jewelry, things of that nature. So get ready. That's how I see it. It's my opinion. Let me know what you think. Comment down below. Have a phenomenal weekend. Take some time. Work on your preparations. Most of all, do not get complacent, ladies and gentlemen. Dow Jones down 336, NASDAQ down 195. With all the manipulation taking place, with everything they're trying to do to keep these markets propped up, they're having a very difficult time. And remember, who cares what's happening in the stock market? It's completely fake and manipulated and completely detached from reality. The only reason I talk about the stock market is this. We have pensions in those markets. People's 401ks, their retirements are in those markets. And those markets are going to collapse at some point. It is inevitable. So if your pension, if you have a pension, if you have a 401k, if you have a retirement, it's tied up in these markets. So be as diversified as you can. Get what you can get out of the system and have something to fall back on, not just a pension, because it may not be there for you. Your 401k may not be there for you. Maybe 50% of it will be there. Maybe 75%, maybe 25%. We don't know. But right now, take action and be diversified as much as you can and be out of the system as much as you can. The system is failing. The system is on borrowed time. The system is destined to collapse. And if you're in the system, you're going to collapse with it. God bless. Have a wonderful weekend. Talk to all of you very, very soon.